Alright guys, so tomorrow's trading ranges are here and let's get right into it. Starting in SPY, tomorrow's implied move is between 566 and 573, and that is from options. The 30-day average volatility is quite a bit wider, 562 to 577. The implied move on Wednesday's contract is between 565 and 574. And to the upside, the first level to look for is going to be this gap. We did see a bit of resistance there today. So the top of that gap is at 571. Above that, the top of the implied move is at 573. 573 lines up perfectly with where we have all-time highs. Highs are at 572.88, just 12 cents underneath the top of the implied move. So if you do think that all-time highs are going to be resistance tomorrow, then 573, 574 could be a spread that you look to. And then to the downside, we do have the 35 EMA just underneath us, and that has been a very resilient support ever since we got inflation data. Right here we saw that bounce and we got above that 35 EMA right here, and it has held as support all the way through FOMC and then into this week. So 35 EMA just below us. If we do lose that level, then the next level underneath is the bottom of the implied move at 566. The top of that FOMC gap is just underneath that at 565. That's also the bottom of the implied move on Wednesday's contract. And the bottom of the trading range tomorrow is in the green here. So if we do drop on bad consumer sentiment, we might find a little bit of buying at this level. The bottom of that gap is at 561. And then underneath that, we have the 30-minute 200 moving average. We are a bit far away from this. If we don't drop, then we may stay sideways here for a little bit. And then switching over to SPX, the implied move over here for tomorrow is between 56.85 and 57.50, and that is from options. The 30-day average volatility is about twice as wide, 56.50 to 57.85. Wednesday's contract is between 56.75 and 57.60. And to the upside, the first level to look for is going to be all-time highs. In SPY, the top of the implied move and all-time highs line up perfectly, but in SPX they don't. SPX has all-time highs right in the middle of the implied move for tomorrow, and then the implied move top is at 57.50. Implied move on Wednesday's contract, 57.60. And then just underneath us, we have the 35 EMA. Again, same thing here, huge support ever since we got inflation data and all the way through FOMC right here. Once we got above that 35 EMA with CPI, and then we followed through with PPI, consolidated back to it for FOMC, and then we gapped up and we are still holding that 35 EMA. That level absolutely needs to be on your chart tomorrow. If we do break that, 56.85 is the top of the implied move. 56.75 is the bottom on Wednesday's contract. And if we do drop tomorrow, I would probably be looking at that spread, especially since we have a big green gap underneath it. So on the day, this does look like an attractive spread if we do drop. And then that 30-minute 200 moving average is waiting for us just underneath all of that. And then switching over to QQQ, the implied move for tomorrow is between 479 and 487, and that is from options. The 30-day average volatility is about twice as wide, 475 to 491. And then on Wednesday's contract, 478 to 488. To the upside, we do have this interesting resistance level. You could see last week after FOMC, we gapped up and we pushed up to this level right here. And if we zoom out, we could see that exact level as resistance to other places before. So 485, rounded out 486, is definitely a resistance level. Actually, the top of that does hit 486. So that is just underneath the top of the implied move. So 486 right here, then 487 is the top of the implied move, and 488 is the top of the implied move on Wednesday's contract. So if you think that this is going to hold as resistance tomorrow, then 487, 488 would be a great spread to look at. And then above all of that, we have this red gap, and that is from back when we made all-time highs in July. We did gap down off of that a few days later, and we've been trading completely underneath that level ever since. Looking at it from this time frame right here, Stupid Willie is showing weakness. We see higher highs in price and lower highs in Stupid Willie, which makes me think we may not have enough momentum to get through this right now. All right, so that was the upside, and then to the downside, we do have the 35 EMA right here, and after FOMC, after that pop, we dropped back down to the 35 EMA, and we've been bouncing along it ever since. So that is just underneath us. If we break that, next level to look for, 479, then the implied move on Wednesday's contract, 478, and then that would take us into this FOMC gap, which is a little bit of a disaster. Right now, the only level within tomorrow's trading range inside that gap is this dashed line right here. And if we zoom out, that was a previous resistance that we did gap over, and we need to see if that level turns into a support, and that is at 477. And underneath all of that, if you guys have been watching lately, you know the mess that is underneath here. I'm not going to get into it tonight because it is not in tomorrow's trading range, but 474 is not too far away. And then switching over to IWM, the implied move here for tomorrow is between 218 and 223, and that is from options. The 30-day average volatility, twice as wide here as well, 216 to 225, and 217 to 224 on Wednesday's contract. To the upside, we do have the 35 EMA. This is the only one where we are trading underneath the 35 EMA right now. We are underneath the 35 EMA and stuck in the FOMC gap. But if we manage to get to the other side of that tomorrow, then the top of the implied move is 223 and then 224 on tomorrow's contract. If we do get to the other side of the 35 EMA, 223, 224 bear call spreads is what I would be looking to. And then just above our trading range for tomorrow, we have 225. And I'm just going to zoom out. 225 has a bit of history being a resistance. It's right here. We saw it in late July, early August, right before we saw that big drop. So if we do end up trading upwards tomorrow, just be aware that we have a huge resistance level at 225. And then to the downside, the bottom of the FOMC gap right here, 219. It is very common that when we fill a gap, that level turns into a support. So watch how price reacts when we fill that gap. 218 is the bottom of the implied move on tomorrow's contract, 217 on Wednesday's contract. And we actually have two gaps underneath us. We made two gaps last week, one before FOMC and one after. And the bottom of that second one is lined up right with the bottom of the implied move on Wednesday's contract, which is 217. And if we break underneath that, there is definitely going to be support around 216. So max pain, I don't see being any more than 216 at this time. We've got three big moving averages going through that area, so I would definitely start a long position around here. And then lastly, we have DIA, and this is still the most bullish setup. I am not saying that we can't pull back. We are very far away from the 30-minute 200 moving average and a bit overdue for a pullback. but we have all of the moving averages in the right order, higher time frames underneath, lower time frames above, and that is bullish. And the implied move for tomorrow is between 416 and 426, and that is from options. And then to the upside, the first level to look for is going to be all-time highs. We just made these all-time highs after FOMC, the day after, and that is at 423, just a little bit underneath that at 422.78. But if you're looking for the next strike out, that's 423. And then the top of the implied move is 426. That is it to the upside tomorrow. And then that 35 EMA underneath us, huge level, absolutely needs to be on your chart because we have seen that as a very steady support in this uptrend, just like we saw it as a pretty steady resistance in the downtrend. So if we break it tomorrow, and we are very close to it right now, then look to that FOMC rate cut gap. The bottom of that gap is at 416, which is also where we've seen some support, and then before that we saw it as resistance. So 416, and because there's another up gap underneath it, I would say that if we do drop this week, then 416, 415 bull put spreads would look like an attractive option. And then underneath all of that, the 30-minute 200 moving average, waiting there to catch us if we do drop. There you have it, guys. That is everything I see in all of our trading ranges for tomorrow. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys